Hello, this is Organization with Olu. Now you've done all your groundwork, you've done all your due diligence. Now you want to start actually investing in stocks and shares. So, how do you do it? Stick around. I think you're going to like what I've got for you. Right now, what I'm going to do is share my screen. Okay, so what I'm going to do now, I'm going to just show you what you need to think about. Now, I'm going to keep this in a very, very simple way. I'm just assuming, number one, I'm assuming you're a beginner. You've done all your groundwork, you've done all your due diligence, you know exactly who to invest with, you've done all that, you've done the research, and now you're now ready to actually start doing it. What do you do? I'm going to show you two simple ways. Either as a medium long-term investor who's paying regular contributions, or somebody you would call maybe like a swing trader, somebody who wants to look at the market and play the fluctuations and benefit from the fluctuations in the marketplace. So I'm going to show you both ways. A beginner, you can do both of these things. Depends on what you're comfortable with. Okay. Remember, this is not financial advice. I am just showing you, giving you, providing you financial education, making you wise so you can go out there and you know what you're doing. But you need to do your own due diligence. Okay. So the first way I want you to think about, if you decide, right, I don't want to be looking at the market. I don't want to be looking at I just don't want that. I just want to invest in something. I'm very happy with the company. I want to invest for a couple of years, 3 years, and that's what I'm going to do. Okay, so you're paying regular contributions. So let's assume you're going to be paying £100 a month on the 28th every single month. You're just going to be paying that. Okay, you're not bothered about looking at the daily prices. That's what you want to do. So what you're doing is what you call pound cost or stroke dollar cost averaging, depending whether you're in England or whether you're in the US. Okay, so rather than focusing on timing the market, pound cost or dollar cost averaging means you routinely invest a regular amount to your investment. This means you average out the price of your investments, smoothing out the highs and the lows. And I will show you, I'll give you an example here. You start paying £100 a month. Let's just assume you're buying Virgin Galactic. By the way, this is not a recommendation to buy. This is just an example. Let's say it's $33. Let's say that would be about £24. You get 4.16 shares, assuming that the fractional shares. Okay. So the value of the shares, the value of one share is $33, $34, 40. Remember, you're paying £100 and you're purchasing, you're buying 4.16 at this particular price, at $33, then at $34, 46. Can you see you're buying at a very high price here? 72, 55, very high prices, but you're also buying at very low prices. The idea is that over time, you're going to average out and it comes to about 38.33. So that was the average price you paid for. Okay. It's slightly higher than the initial price, but it's a lot better than $72. Okay. So you're buying when it's high, but you're also buying when it's low. Okay. And that's for maybe a beginner that just wants to doesn't want to get involved with the stock market, just wants to put money away and just benefit from dollar cost averaging. We might go into this in a little bit more detail at a later video. So right now, what I'm going to show you now is that if you want to be you want to get more, you want to participate a lot more in the stock market, how can you do it as a beginner? And I will show you. Okay. Now let's just have a look at Facebook, which we've talked about in the previous videos. Please, guys, please go and watch my previous videos. It's very, very important because I have done quite a lot of the basics. Okay. So I'm just assuming here now, you don't really want to be paying £100 a month. You want to go into the market and you want to look at the market quite a lot. How do you then invest? Okay. And I'm just assuming you want to be a swing trader. In other words, you want to buy low and sell high. How do you do that without getting bogged down with technical analysis, which we're going to talk about at a later stage? But as a beginner, you can actually confidently actually profit from the stock market if you know what you're doing. So the idea of what you're trying to do, you're trying to buy low. Okay. Now, as you can see, it's gone down to 263. You don't jump in and say, oh, it's low, I'm going to buy it. You need to find out why has it gone low. So you do your research, find out why has it dropped. Has it dropped because the entire market has dropped, or has it dropped for a specific reason? Again, have a look at the company. What does it normally do? What is the moving average? And moving average simply means over time, over a certain period, what's the average? Is it well below the average? There could be a really good reason why it's below the average. Maybe the whole market, maybe tech, for example, Facebook, maybe the tech market has dipped or something has happened. And maybe like currently now, they've got a problem with Apple and that's brought down the market. That's brought down the share price. However, if you have strong belief in the company, you have a strong belief in the company, you know it will go up. So the idea of being a swing trader or benefiting as a beginner, benefiting from the ups and downs of the market, is that what you want to do, you want to look at when the share, you have to wait for the share price to be relatively low, under the average. Okay, you want it to be quite low, which is 250.66 as of 7th of January. And what you want to do, you want to have confidence, you want to do your research, you want to make sure you understand why it's gone down. Okay, and the company has strong fundamentals and you know it's going to go up. And the idea is you need to be patient. You need to be patient, you need to wait until it goes up. You must have a rough idea of where you think it will go based on previous history. So what you need to do, as you can see here, is very easy. Just go into Google, and you have other sites as well. You have yahoo.com. You just simply need to go and find out what they've done. So year to date, 1 year, 5 years, you can see pretty much what they've done. I wouldn't go back 5 years. That's probably too far. I would go back a year and see what it's done. Okay. So as you can see, Facebook here in September, it was at 280. It went up to 380. Okay, and now it's gone down. So the idea really is, guys, you want to try to buy low. You want to buy low and sell when it gets high. And that's the idea. And then you can reinvest your profits. So but before you dive in, find out why has it dropped. For example, why has this gone down? Why is it now 251? Is there a problem? Find out. If it's a short-term problem, if you've done your research and the company is really, really strong, you know the share price is likely to go up. And the idea of you being a swing trader or benefiting from the fluctuations in the marketplace is that you sit tight and you wait until it goes up to pretty much the price you anticipated it will go up to. Okay, so now, for example, you buy here. For example, right now it's down to 313. It's gone up again. So 313. So let's say you buy at 313. If you're convinced that Facebook is going to recover from the problems they have with Apple, and if you're convinced that it's going somewhere, you've done your research, which I've told you to do in previous videos. They're developing WhatsApp, they're developing Instagram, they're doing all sorts of different things, and the company will recover. Okay, that's where you need to do your research and be confident. And if you're confident, you're buying here. You just need to wait until the share price goes up. And when the share price goes up, and then that's when you sell. Okay, if you really want to be very active in the stock market, and that's what you do, you just pick one or two investments, research those investments. Okay, you don't need to get bogged down by technical analysis. When you're on your app, sometimes when do you sell, when do you buy? Okay, to make it very simple, sometimes you have what you call a resistance level. And what that simply means, without getting too technical about it, sometimes you find that it's not going past a certain number. For example, you might have a resistance level here where it was 380 380, 364. And then what you find on your app is that it goes to 364, 365, it comes back to 362, 364, and it continues doing that for some time. It's quite obvious it's reached a resistance level. Okay, there's a resistance there, or it always seems to go back when it reaches a certain stage. Okay, and you can tell it on the app because the numbers keep flashing. It keeps going to 363, then it keeps going back to 362, it keeps going to 363, then it goes back to 362. You can see there's a resistance there. You don't have to be you know you don't have to be an experienced investor to know there's a resistance level. Okay, and that's probably the time you think, well, maybe now I should need to cash in. When you approach that resistance level and it's not going up as it normally does, it's reached that stage where it seems to be like that, and it seems to be going this way, going that way, then you've pretty much reached a resistance level. You probably, if you're looking to make sure profits, then you're probably better off selling at that stage, if that's what you want to do, and making your profits. Okay, rather than waiting, and then it's probably going to go back down. Once you've reached that resistance level, sometimes it goes past the resistance, many times it goes back. So hopefully this is not being too technical. Hopefully you understand what I'm talking about. And please like, share, and subscribe. Bye bye. Thank you very much. See ya.